Hi there, another undervalued stock, which is PDD Holdings, or the former name PIN. As you can see, the stock price has declined by over 40% from its peak. And now the market cap is around 140 billion. And based on the analyst estimates, the stock price seems undervalued. So in this video, we'll find out the outlook of PDD Holdings and at the end its fair value. How much money you can expect from this investment. So let's begin. You can see in this image the analyst estimates, the past revenue and future revenue. And as you can see, the revenue is expected to increase a lot, from 17 billion to over 40 billion by 2027. I don't know why they expect this decline from 60 billion to 43 billion, but as China economy is expected to grow by 5% a year, you can assume that the revenue will grow even more in the future. Maybe the numbers will be higher or lower. So these estimates are just an overview of what you can expect from this company. And the most important numbers are their earnings and free cash flow. These will make the stock price to go up. That's why investors focus on these metrics. And as you can see, their earnings are expected to increase a lot, from 4 billion to over 12 billion by 2026. And also their free cash flow, from 5 billion to over 17 billion by 2026. So that's amazing. It's expected a lot of growth ahead. Now, if you look at the last quarter results, you can see that the revenue has increased by over 60% year over year. An amazing performance. And also their profits, the net income, have increased by over 40%. And that's why the stock price has more than doubled from its bottom. As you can see, over 200%. And still the stock price, based on the analyst estimates, is undervalued. Let's see more. Moreover, they have over 20 billion in cash. Around 25 billion. And now the market cap is around 140 billion. So even though they face more problems ahead, they will have enough money to fund their operations. Now, if you wonder how they make money, they have two apps. PIN, which is a Chinese app and operates only in China, and Temu, another app which operates globally. So if you want to order something from them, you can try their app to see how the service is. And if you can believe, PIN has over 700 million users, monthly active users. So this is amazing. They compete with Alibaba, which has over 1 billion users. However, the growth rate of PIN is higher, because the revenue is smaller compared to Alibaba and JD. If you want to find more about the competition, you can search on my channel, Alibaba or JD.com. So as I said, they have over 700 million active users. And they make money from marketing services, merchants pay for running ads on their app, transaction services, every time there is a sale, PIN charges a commission fee, which is around 0.6%. Of course, this depends on the merchant. Plus, they also sell direct to consumer. They have an online grocery platform, Duo Grocery, and other services like logistics and payment. And their business model is more like a social media app where users can share the links with their friends, create shopping groups, and invite others to join the group. So it's something like Instagram or TikTok, but you watch videos about different products. Another important thing is that the founder owns around 27% of PDD Holdings. Now, he decided to step down. He wants to focus on food sciences and life sciences. He wants to do something else. So this change may affect PDD Holdings if the current management doesn't grow this business more in the future. That's why you have to follow their performance. Moreover, there is another thing you have to be aware of, which is dilution. As you can see, the number of shares has increased from 1.1 billion to over 1.3 billion in the last 4 years. And if they issue too many shares, you know that you have the risk of dilution. Maybe they'll start doing some buybacks, as the earnings have improved and are expected to grow even more in the future. Plus, they have a lot of cash on hand. As you can see, over 24 billion. Now, let's see the fair value of PDD Holdings, or PIN, the former name. First, the risk. Based on the analyst estimates, their earnings, the fair value may be around 86 billion if their growth rate slows. Of course, if it goes down, then the value will be even lower. So this might be the risk. you can see another decline in the stock price. The fair value per share may be around $68 for a 10% annual return. So if Pinduoduo or PDD Holdings faces more competition, their profits decrease, and also the revenue, then you can expect the risk, the market cap, to go down. Now the great scenario, if they keep growing more in the future, as China economy is expected to grow by over 5% a year, then the fair value will be quite high, around 260 billion. Or if you want the fair value per share, that will be over $200. So the current stock price, $99, you can easily have a double plus an annual return of 10%. So the upside is quite high. You can make a lot of money with Pinduoduo or PDD Holdings. In a normal case, where they might grow a little, not that much, the fair value will be around 173 billion for a 10% annual return. Or if you want the fair value per share, that will be over $130. So the current stock price, $99, the stock price seems a little bit undervalued. So if you like this business, what they're doing, their opportunities, you can take advantage and invest in this company. But you have to be aware of the competition, Alibaba and JD.com. By the way, Tencent is invested in PDD Holdings. They own around 15%. So there are three major players in e-commerce industry in China: Alibaba, PDD Holdings, and JD.com. All of them can grow more in the future. Be aware that China has over 1 billion people, and their economy is expected to grow by over 5% a year. So they have room to grow. And all of these companies might deliver a high return in the future. However, if they face more competition, for instance new players, be aware that their profits and also their revenue may be affected. And if their profits decline, or the estimates go lower, then the fair value won't be around 170 billion, but lower. That's why you have to focus on the risk first, to think how much money you can lose. So as I said, if you like the risk, you can take advantage and invest in this company. The important thing is when you buy and when you sell. As you can see, a return over 200% in just 2 years, even less than 2 years. And if you have any questions, please let me know in the comments.